What's the difference between financial freedom and financial independence? Are they the same? Are they different? Let's dive in. Okay, you might have heard people use synonymously. They might hear financial independence. You might hear people talk about being financially free. But is there a difference? Is there not? Is it all the same thing? I kind of want to go into this in this video, but more importantly, not just define it, but I would love to be able to show you how to actually do it. So let's talk about that right now. All right, so let's talk about these definitions, financial independence versus financial freedom. Now, I get it. The definition can be as varied as the people that try to define it, right? That's no mistake. I like to define it this way to keep it simple. For me, financial independence is when my passive income exceeds the money that I spend every month for my monthly bills, right? When I have enough to pay my monthly bills using that passive income that's coming in from my investments, that's when I feel like I'm financially independent. Now, I don't believe that's financial freedom. Now, some people might say that. Some people call that the point of getting out of the rat race, like Robert Kiyosaki says in Rich Dad, Poor Dad. But I like financial freedom, which is it's not just about being independent. It's not just about covering your bills, but having more than enough to create a lifestyle that you love. And that may only be a few thousand more a month. It could be tens of thousands more a month, depending on what you define freedom as being. And that's where it becomes individual. Now, if I can give you a bonus here, I will tell you this from my own personal experience because I've been financially independent in my life now quite a long time. I had to do it twice because I screwed up the first time, so I did it again by the time I was 39. And that second time, I've been financially independent now for over 8 years. And I'll tell you this, financial freedom isn't just a number. Financial freedom has nothing to do with your state of your bank account or state of your monthly income or anything like that. It's a state of mind. It's actually even a state of being. Who you are. You could actually be financially independent. You could even have more than enough money to be financially free, but you may not feel that way if you still live a world of scarcity. If you still believe that there's never enough money, never enough opportunity, never enough time, if you're always in that place that there's never enough, guess what? You will never have enough money to make you financially free, no matter what it does. And I've had several clients, because we've helped many clients become financially independent and some even financially free. Some will say, even when they get to that financial independence point, saying, wait, I don't feel much different. Like I see that the money's coming in, but why don't I feel free? And I keep telling them, it's like, because you hyper-focused on the number, but you didn't focus on this. You know, what got you to feel free? It's an emotional thing. So freedom is sometimes more emotional than it ever is financial. So just understand that. Financial independence can be a number, but financial freedom is more of an emotional feeling. And yes, could you be financially free at different numbers? You bet. You know, could it be just at the time of you're financially independent? Sure. I'll tell you, for me personally, I became financially free emotionally before I became financially free on a number. Because once I got to the point where money no longer dictated my life, when I released myself of that, it became much easier. So just understand that financial freedom, again, it depends on how you define it. But for me, I've realized, and not just for me, but for other people I've worked with as well and coached, it's very much more an emotional aspect. But let's get to financial independence, because for most people, this is gonna be your first step. And everyone's gonna ask, like, well, yeah, but how do I get there? How do I actually accomplish financial independence? How do I create enough passive income where I work because I want to, not because I have to? I call this being work optional. Well, that's where you need to really release all the things you've been taught. For example, if you've been taught that you're supposed to save your money, set it and forget it, spend very little money and try to save everything you can, squirrel it away forever, and then hopefully someday you can live off something. And usually that investment is almost always mutual funds. It's putting your money in the retirement accounts, like your IRAs and your 401ks and your Roth IRAs and all these other things. And you're always going to mutual funds. Now, why have you been doing that? Well, I'll tell you why, because I used to be a financial advisor and I learned it firsthand. The reason you've been taught and really brainwashed to do that is because there are literally thousands, tens and tens of thousands of financial advisors out there today that all work for financial institutions that pay big, big money to advertise to you. That is how you invest. The big banks, the big Merrill Lynches and the Fidelities and the Goldman Sachs of the world, they're all telling you, put your money away, set it and forget it, right? But I want you to think about this. What does a bank do with their money? Do they just take the money and they just put it on a shelf and let it collect dust and compound and interest over time? No, they're doing stuff right now to create income with that money. They're turning that money around and they're lending it out. By the way, everybody tells you should be debt free. Do you realize that banks have more debt than you do? Sometimes banks will have 5 times the amount of debt that they have in assets. If you're not sure about that, look it up. Look up debt to equity ratios on the financial websites, and you'll see that banks have sometimes 2, 3, or more times debt than what's on their books of assets. Now, if you were a normal person, you would say, there's no way I'd survive financially. Well, that's because you're not them. They learned how the rules of money to work in their favor, and they're just telling you to store your money with them forever. By the way, if debt were so evil, why do they have so much of it? It makes you wonder, doesn't it? Why do they tell you to pay off debt faster when, again, they make money off of that? Because they want that money flowing in. It creates more income and cash flow faster, the faster you pay it back. That's also how I like to look at investing too, is how can I get my investments to start paying me right away? Not just put it on a shelf and set it aside and wait for it for someday, but what can I do right now? And I'll tell you from firsthand experience, not just my own life, but even like with my dad. My dad was a penny pinching, just cheap son of a gun saver. He says frugal, we all say cheap, right? Like he's so cheap that when he would go to restaurants, he would not just tip. If he got bad service, he would steal plates. He would steal salt and pepper shakers because he thought he deserved a tip. That's how cheap my dad is, okay? He steals stuff instead of tipping people. I know, don't worry, he's too old to go to jail at this point. So anyways, so that's the thing, like he was so cheap. He was a penny pinching saver. He paid off all of his debt. He was doing everything he was supposed to do. And then I had to tell him, Dad, you're 61 years old, but if you want to retire right now, you better hope you die in 5 years because that's when you'll run out of money. That's the guy that was doing everything right. And I've seen it time and time again with other people that had financial advisors like coaching them for many, many decades and then finding out it's just not enough. This is the problem because what you're supposed to do is save up all this money in these mutual funds, hope that the stock market doesn't take it all away from you at some point, and then live on less than the interest. They recommend maybe 3% when you get to retirement age. So if you even happen to save up $1 million, which is a good accomplishment, the average right now is about between $300,000 and $400,000 for 65-year-olds. But if you get up to $1 million, now you're living on $30,000 a year. You're now living on less than the poverty line right now. That doesn't make sense, does it? Then you have to save $2 million if you want to live on $60,000 a year. If you want to live on $100,000 a year, you got to save over $3 million in that. And that's in today's dollars. That doesn't include if you're trying to retire in 10, 20 years from now, you got to get even higher because you get that pretty soon, that $10,000 a month or whatever you want to be able to live on will be a higher number. So the best thing to do is get your money working harder for you right now. So I'll give you an example using that same $1 million. I had a client who had $1 million in his retirement accounts. And by the way, he timed the market so perfectly that he actually got up to $1 million. Not because he was amazing, he just happened to get out of the market whenever it went down for the previous 2 recessions. So he got lucky, had $1 million in his retirement account, and his financial advisor says, congratulations, you can now live on $30,000 a year. He said, I'm living in California. Broke people live on $30,000 a year. Homeless people pretty much live on $30,000 a year. How am I supposed to do that? And so when he started to look for answers, he went to different podcasts. He eventually found our Money Ripples podcast, also on this channel. So be sure to subscribe to this channel. He found the Money Ripples podcast. He said, you know what? I like this. Like maybe I can actually create income from this better than $30,000 a year. Well, he did. As we started to look at different options, explore those things, found out he could actually go and buy a couple duplexes. He got into some apartment buildings as well that he shared ownership with other investors. He even did some things with oil and gas where they went in as other business partners as well that started to kick off income to the point where his million was now kicking off over $100,000 a year. Way better than $30,000 a year. Imagine how much different of a lifestyle your lifestyle would be with having $30,000 versus having $100,000 a year. It's night and day difference, isn't it? Same money, just working harder for you. And that's one thing we see time and time again. I had another woman, she was a 55-year-old woman living single out in Phoenix. She says, listen, I'm a health coach, but my dream is every day that I wake up, I work out, I coach a couple of my clients, and then I have the rest of the day free. I said, oh, that's awesome. I love that lifestyle. To have the whole day free other than coaching some clients, which she loved doing regardless of the money anyways. I said, well, what do you need per month to do that? She's like, I only need $2,000 a month to live on. Okay, well, when do you hope to have that? She said, well, I talked to my financial advisor and I only have $250,000. It sounds like I'm gonna have to get up to at least $1 million in 10 years. So I'm hoping and praying that I can save enough and maybe the market will just happen to do amazing things in the next 10 years that I might be able to quadruple my money. I said, that's a pretty aggressive goal. Not likely to happen. The stock market usually does not do that, but who knows? I said, well, so you're trying to get up to $1 million in 10 years and that would be your dream, right? Yeah, but what if you could live off $2,000 a month right now? What do you mean? Well, take that $250,000. That $250,000, let's just say you got paid 10% a year on that money that's coming to you as income. How much are you earning? $25,000 a year, which is how much per month? Just over $2,000 a month. Right. Do you realize that you're hoping and praying to be able to do it in 10 years when you can actually do it this year, in 1 year? And if you want to have a little extra, great, invest for another couple years, whatever. Doesn't matter, you can just keep going. She's like, are you telling me I could actually retire now when I'm in my 50s? I said, yeah, you could. And it blew her mind. She didn't even think it was possible, which was part of the problem. She's like, are you sure? Are you sure? I'm like, simple math. I've got people that are paying me more than that right now. You could actually make more. I'm just trying to under-promise so you can over-deliver. So, there you go. And that's the difference, guys, is that again, it's always about how you can get your money for income. Don't just accumulate money, but get that income to create this income avalanche. Because as you get that passive income coming in, you reinvest that income to create more income year after year after year after year, to the point where you not just become financially independent, but eventually become financially free. You can actually have your cake and eat it too. All right, now you're probably wondering, how do I actually do this? I recommend go to moneyripples.com. There's a passive income calculator that will actually give you a pretty accurate number of what passive income you could create in your current situation in the next 12 months. Go to moneyripples.com right now.